There are 5 specific things you are sitting on right now that could add hundreds of dollars a month to your check. And the government is never going to knock on your door and hand them to you. Not one. Not ever. You have to reach out and take them. That is the entire point of this video, and I want you to hear it before we go one step further. Everybody this year is talking about a $74 monthly Social Security increase like it is the big story. It is not the big story. The big story is that the $74 is the smallest piece of what you are actually owed, and almost nobody is telling you about the other 4 pieces. So here is my promise to you. In the next hour, I am going to walk you through 5 things, one at a time, and each one is quieter and bigger than the one before it. Stay with me all the way to the end because the last one is the one that quietly costs people the most money year after year, and they never even know it happened. Let me be blunt about the number everybody is repeating. The Social Security Administration announced a 2.8% cost of living adjustment for 2026. On average, that raises the typical retirement check by about $56 a month, according to the SSA's own press release from October 24, 2025. Some folks with larger benefits see closer to $70 or $75. So when you hear $74 floating around online, that is a real, defensible ballpark for a mid to upper benefit. But here is what I need you to understand today. That raise is automatic. You do not have to lift a finger for it. It shows up whether you are paying attention or not. And precisely because it is automatic, it is the least interesting thing happening to your money this year. The interesting money, the money that is being left on the table, the money that adds up to thousands of dollars over a retirement, is money you have to claim. Eligibility is not the same as receiving. Read that again. Eligibility is not the same as receiving. You can qualify for something perfectly and never see a dime of it, simply because you never asked. Now, before we go any further, I need to stop you from disqualifying yourself, because I already know what half of you are doing right now. Some of you are thinking, Emma, this is not for me. I make too much money. I have savings. I own my home outright. These programs are for people worse off than me. And the other half of you are thinking the exact opposite. You are thinking, this is not for me either. I barely get anything. My check is small. There is nothing to optimize on a check this size. Both of those groups are about to make the same expensive mistake. The person with the 6-figure retirement portfolio and the person living almost entirely on a modest monthly check are both leaving money behind, just in different places. I have seen retirees with paid-off houses and healthy IRAs miss out on thousands, and I have seen folks on the tightest budgets in the country miss out on the very programs designed for them. So do not you dare close this video thinking your situation is the exception. It is not. Let me tell you why nobody told you this. And I want to be specific because vague blame helps nobody. The single biggest reason you have not heard about most of what I am covering today is that the Social Security Administration operates on an application basis, not an enrollment basis, for almost everything beyond your base retirement check. Think about what that means. The default setting of the entire system is silence. If you never apply, the answer is automatically no, and no letter ever arrives explaining what you missed. The agency is not funded or staffed to chase you down and tell you about every program you might qualify for. Add to that the fact that many of the most valuable programs are administered jointly with your individual state, so there is no single federal voice announcing them. The information is scattered across the SSA, Medicare, and your state's Aging or Human Services Department. That fragmentation is not a conspiracy. It is just bureaucracy. But the effect on your wallet is exactly the same as if it were designed to keep you quiet. Let me quickly tell you who I am and why I am the one saying this to you. My name is Emma Smith. I am a state bar licensed estate attorney, and I have spent more than 15 years sitting across kitchen tables and conference room tables from retirees and their families, untangling exactly the kind of money that gets left behind. I have watched families discover, too late, that a parent qualified for help for years and never claimed it. And I want to say this plainly because trust matters here. I do not make a single dime from anything I am about to tell you. There is no product at the end of this. Every program I mention is a government program you access directly, for free, through official channels. The unifying idea for everything today is simple. You are not asking for a handout. You are collecting on a system you paid into your entire working life. This is not charity. This is yours. You earned every one of these dollars with decades of payroll taxes, and today I am going to show you how to actually go get them. All right, let us open the vault. Number 1 on our countdown, and this is the warm-up, so do not get comfortable. Number 1 is your own cost of living adjustment, but not the way you have been told about it. Yes, the 2026 COLA is 2.8%. Yes, it lands automatically in January. But here's the part almost nobody checks. The SSA is now sending your personalized COLA notice online, through your My Social Security account, and by mail if you have not gone digital. That notice tells you the exact new dollar amount of your check, and, critically, the exact amount being deducted from it. Most people glance at the new number, feel a small flicker of satisfaction, and file the letter away. That is a mistake, because the raise is only half the equation. The other half is what is being taken out before that raise ever reaches your bank account. And that is where this warm-up item quietly turns into real money. Here is what I mean. In 2026, the standard Medicare Part B premium is rising to $202.90 a month, up from $185 in 2025. That is according to the official 2026 Medicare costs fact sheet from Medicare.gov. Now look at what happens. Your COLA gives you roughly $56 to $74 more, but your Part B premium jumps by almost $18. That premium is deducted directly from your Social Security check before you ever see it. So the raise you are celebrating is smaller in your pocket than it looks on paper. Research from the Center for Retirement Research at Boston College found that the higher Medicare premium will eat up more than 25% of the average retiree's COLA in 2026. 25%. So the very first thing I want you to do is open your COLA notice and read the deduction line, not just the benefit line. Because you cannot fix a leak you refuse to look at. And this is exactly why number 1 is only the warm-up. Because for a lot of you, that Part B premium is not fixed in stone. That is the tease into number 2, and number 2 is bigger. But first, let me hand you the action step for number 1, because I promised you actionable instructions, not just talk. Go to www.ssa.gov/myaccount and either sign in or create your My Social Security account. It is free. Inside, open the Message Center and find your COLA notice. Write down 2 numbers, your new gross benefit and your total deductions. If you have not created that account, and millions of retirees still have not, do it this week. It is the single most important window you have into your own money, and it is the tool we are going to use again for almost everything else on this list. That was the warm-up. The next one is bigger. Number 2. This is where the money starts to get serious, and it is the one that makes people sit up straight. If your income is limited, there is a set of programs called the Medicare Savings Programs, and depending on which one you qualify for, your state will pay your entire Medicare Part B premium for you. Let me say that again because it is worth repeating. Your state can pay that entire $202.90 monthly premium on your behalf. That is not a discount. That is the whole thing, gone from your deductions, put back into your check. Think about what that does. The COLA raise that Medicare was quietly eating? For someone in this program, the premium stops eating it entirely, and the full raise lands in your pocket, plus the premium you were already paying comes back. That can be the difference of more than $200 a month for the right household. $200 every single month for the rest of your life. Now watch what happens when you compare 2 neighbors on the same street. Picture Dolores and Frank. They are both 71. They both worked their whole lives. Their monthly incomes are within a few dollars of each other. Frank never heard of the Medicare savings programs, so every month the government pulls that Part B premium straight out of his check, and he never questions it. Dolores applied. Her state pays her premium. So at the end of the year, Dolores has kept roughly $2,400 that Frank simply handed back without knowing there was another option. Same street, same income, same age, 1 phone call apart. The only difference between Dolores and Frank is 1 piece of information, and Dolores had it. I do not want you to be Frank. And here's the part that catches people. The income limits for these programs are higher than you think, and in many states there is no asset test at all anymore. Here is your action step for number 2, and this is important because the Medicare savings programs are administered by your state, not by a single federal office. You apply through your state Medicaid agency, even though this is about Medicare, because these programs run through the Medicaid system in each state. You can start by calling your state health insurance assistance program, known as SHIP, which offers free, unbiased Medicare counseling in every state. You find your local SHIP through Medicare.gov or by calling 1-800-Medicare. Ask them specifically about the Qualified Medicare Beneficiary Program, the Specified Low-Income Medicare Beneficiary Program, and the Qualifying Individual Program. Those are the 3 tiers, and they each have different income limits. Because the limits change every year and vary by state, please verify the current figures for your state with SHIP or your state Medicaid office before you assume you do or do not qualify. That one verification call is worth potentially thousands of dollars a year. And here is why I told you not to disqualify yourself back at the start. So many people hear the words income limited and immediately assume they earn too much. But these limits are set as percentages of the federal poverty level, and they are adjusted upward every year. And several states have expanded them well beyond the federal baseline. I have had clients who were absolutely certain they made too much, apply anyway on my insistence, and qualify. Costs you nothing to ask, costs you thousands to assume. Read that again. It costs you nothing to ask, and it can cost you thousands to assume. Number 2 was bigger than the warm-up, but number 3 is quieter, and in some ways it is the sneakiest of all, because it is the one people leave sitting on the table the longest, sometimes for years, without ever realizing the door was open the whole time. Number 3. If number 2 was about your Part B premium, number 3 is about your prescription drugs, and it is called Extra Help. The full name is the Medicare Part D Low-Income Subsidy, but everyone just calls it Extra Help. This is a federal program that helps pay for your Medicare prescription drug costs, your Part D premiums, your deductibles, and your co-pays at the pharmacy counter. And the value here is enormous. The Social Security Administration estimates that Extra Help is worth about $12,000 per year to someone who qualifies. $12,000! Let that sit for a second. That is not a coupon. That is the cost of a used car, every year, in prescription savings that people simply never apply for. And here is the sneaky part. Many people who qualify for the Medicare savings programs from number 2 are automatically eligible for Extra Help too. But plenty of others fall in a gap where they have to apply for Extra Help separately, and they never do. Let me show you the contrast again, because this is where it hits home. Picture 2 sisters, Ruth and Alice. Same medications, roughly, same doctors. Ruth walks into her pharmacy, hands over her card, and pays full freight month after month, wincing at the register. Alice applied for Extra Help. Alice walks into the same pharmacy, and her copays are a fraction of what Ruth pays, sometimes just a few dollars. Over a year, on a serious list of medications, the gap between Ruth and Alice can run into the thousands. And the only difference, once again, is a single application that Alice filled out, and Ruth never knew existed. This is the one people leave on the table the longest, because prescription costs feel like a fixed fact of getting older. They are not a fixed fact. For millions of people, they are a choice, made by default, simply by never applying. Your action step for number 3 is refreshingly simple. And this one you can do yourself online. Go to www.ssa.gov/Medicare/Part D Extra Help. That is the official Social Security page to apply for Extra Help, and it is free. You can apply online, by phone at 1-800-772-1213, or in person at your local Social Security office. The income and resource limits for Extra Help change annually, so I am not going to lock a number into this video that might be outdated by the time you watch it. Please confirm the current year's limits on that official SSA page before you decide. But I will tell you this. The limits are more generous than most retirees expect, and they were expanded in recent years so that more people qualify for the full subsidy. One form, once, and it can follow you for years. That is the one form, once, forever framing I want you to hold on to. That was number 3, quiet but heavy. Number 4 is where a lot of you are going to feel a little jolt of recognition. Number 4 is supplemental security income, and I need you to pay very close attention because the name confuses almost everybody. Supplemental security income, or SSI, is not the same thing as your Social Security retirement check. It is a separate federal program run by the same agency designed for people 65 and older, or blind or disabled, who have limited income and limited resources. And here is what trips people up. You can receive your regular Social Security retirement check and still qualify for SSI on top of it if your income is low enough. It is not one or the other. For 2026, the maximum federal SSI payment is $994 a month for an individual and $1,491 for a couple, according to the SSA's official 2026 SSI figures. That is a federal floor, and many states add their own supplement on top of it. This is the anti-disqualification moment for number 4, and I want to hit it hard, because SSI is the program people talk themselves out of the fastest. They hear the words limited income and limited resources, and they shut the door in their own face. But listen, the SSA does not count everything you own. Your home does not count. Your primary vehicle generally does not count. Certain other resources are excluded, so the picture of who qualifies is very different from the picture in most people's heads. I have watched widows and widowers, living alone on a small survivor's benefit in a paid-off house, assume they could never qualify because they, quote, own too much, when in fact the house was excluded the entire time and they qualified easily. Do not run your own case in your head and reject yourself. Let the actual agency using the actual rules run the numbers. Let me give you one more neighbor comparison because it makes this concrete. 2 women, both 80, both widowed, both in paid-off homes on the same block. Call them Beatrice and Sylvia. Beatrice assumed her house disqualified her from everything and never applied for anything beyond her small survivor's check. Sylvia sat down with a counselor, learned her house did not count, applied for SSI, and started receiving a monthly supplement that lifted her income meaningfully every single month. Same block, same house value, same widowhood. One of them asked and one of them assumed. And the difference across a decade of retirement is tens of thousands of dollars. I tell you this not to frighten you, but to shake loose the assumption that is quietly costing so many good people so much money. Your action step for number 4. To apply for SSI, contact the Social Security Administration directly at 1-800-772-1213 or start online at www.ssa.gov/SSI. You can begin the application process online and complete it with a phone appointment. Because SSI has both income limits and resource limits, and because your state may add a supplement with its own rules, this is one where I strongly encourage you to talk to a real person at SSA rather than guessing. Bring your income information, your bank statements, and information about what you own, and let them make the determination. Remember, the answer is automatically no if you never apply. So even if you are only 50% sure, apply. The application costs you nothing but a little time. That was number 4, and I saw some of you sit up. Good. But stay with me, because now we come to number 5. And I told you at the very beginning that the last one is the one that quietly costs people the most money, year after year, and they never even know it happened. Number 5. This is the sneakiest one on the entire list, and it is not a program you apply for. It is a decision you make. And most people make it wrong without ever realizing there was a decision at all. Number 5 is the taxation of your Social Security benefits, and specifically how the timing and structure of your other income quietly determines how much of your check the government takes back. Here is the thing almost nobody tells you. Your Social Security benefits can be taxable. Depending on your combined income, up to 85% of your benefits can be subject to federal income tax. And the thresholds that decide this were set decades ago. And unlike almost everything else we have discussed, they are not adjusted for inflation. They do not rise with the COLA. They just sit there, frozen, while your benefits climb year after year, quietly pulling more and more retirees into taxation who were never taxed before. Let me explain why this is the one that costs people the most over time. Every year, your COLA raises your benefit. Every year, that frozen tax threshold stays exactly where it is. So each year, a little more of the country's retirees cross the line into having their benefits taxed. Not because they got rich, but because the ruler never moved while they did. This is what economists call bracket creep, and it is happening to Social Security taxation in slow motion, right now, to millions of people. The $74 raise everybody is celebrating? For some households, a chunk of it walks right back out the door in taxes they did not owe the year before. And because it happens quietly, spread across a whole tax return, most people never connect the dots. They just notice, vaguely, that retirement costs more than they expected. Now here is where number 5 stops being a warning and becomes an opportunity. Because unlike a frozen threshold, your combined income is something you have some control over. Combined income, in the way the IRS calculates it for Social Security, is your adjusted gross income, plus any non-taxable interest, plus half of your Social Security benefits. Notice what is in that formula. Withdrawals from a traditional IRA or a traditional 401k count, but qualified withdrawals from a Roth account generally do not, which means the order in which you draw down your accounts and the timing of large withdrawals can directly change how much of your Social Security ends up taxed. This is not about hiding money. This is about sequencing money. And the difference between a thoughtful sequence and a careless one, compounded across a 20 or 30-year retirement, is genuinely staggering. Let me put two more neighbors side by side because this is the clearest way to see it. Two couples, the Hendersons and the Parkers. Same total nest egg, same Social Security benefits, same spending. The Parkers withdraw haphazardly, pulling large sums from their traditional IRA in the same years they take Social Security, spiking their combined income and dragging up to 85% of their benefits into taxation. The Hendersons planned. They did some Roth conversions in their lower income years, they spread withdrawals thoughtfully, and they kept their combined income under the thresholds more often. Same money, same street. But the Hendersons keep thousands more of their own Social Security every year, simply because they understood a formula the Parkers never saw. That is the quiet cost of number 5, and it repeats every single year. Read that again. It repeats every single year. Your action step for number 5 is different from the others, and I want to be careful and honest here. This is the one area on today's list where I am going to tell you to get professional help, because the sequencing of retirement income touches taxes, investments, and your specific situation all at once. And no video can run your personal numbers. Before you make any major withdrawal decision or conversion, talk to a qualified tax professional or a fee-only financial planner who can look at your actual accounts. I am an estate attorney, not your tax advisor, and I want you to verify everything on today's list with a licensed professional or official government source before you act on your specific situation. But you cannot ask a question you do not know exists. So the gift of number 5 is simply this. Now you know the formula exists. Now you know the thresholds are frozen. Now you can ask the right question before December instead of discovering the answer in April. Let me stack it all up for you now because I want you to feel the total weight of what we just walked through, all in one place. Number 1, your COLA and the deductions hiding inside it, worth reading closely every single year so Medicare does not quietly swallow your raise. Number 2, the Medicare savings programs, potentially worth more than $2,400 a year if your state pays your Part B premium. Number 3, extra help for prescriptions, valued by the SSA itself at roughly $12,000 a year for those who qualify. Number 4, supplemental security income, up to $994 a month for an individual on top of your regular check, plus any state supplement. And number 5, the taxation of your benefits, where thoughtful sequencing can protect thousands of dollars a year for the rest of your life. Add even 2 or 3 of these together, and you are not talking about a $74 raise anymore. You are talking about a fundamentally different retirement. And I want you to notice the pattern that runs underneath all 5. Every single one of them shares the same DNA. In every case, you were eligible whether or not anyone told you. In every case, the default answer was no until you spoke up. And in every case, the money was already yours, sitting there, waiting, quiet, patient, and completely invisible until you reached out and claimed it. That is the whole lesson of this channel, distilled into one sentence. Eligibility is not receiving. You earned these dollars over a lifetime of work, but the system will not chase you down to give them back. You have to be the one who asks. And now, because you watched this all the way through, you know exactly what to ask for, exactly where to ask, and exactly which office holds the answer. I want to take a moment here to address the person who is still, even now, quietly telling themselves this does not apply to them. Maybe you have a comfortable retirement and you are thinking the low-income programs are not your concern. Fine. But number 1 and number 5 apply to absolutely everyone with a Social Security check, regardless of net worth. And number 5 in particular tends to hit higher income retirees the hardest, because they have larger traditional accounts generating more taxable income. Or maybe you are on the other end, on a very tight budget, thinking there is nothing to optimize. But numbers 2, 3, and 4 were built precisely for you, and they are the most valuable of all. There is no income level at which this video stops applying to you. There is only the choice to check, or the choice to assume. And I have spent 15 years watching people pay dearly for assuming. Let me go back to the systemic point one more time, because I think it matters for how you feel walking away from this. It is easy when you learn all this at once to feel a flash of anger, to feel like something was hidden from you on purpose. I understand that feeling. But I want to give you something more useful than anger, which is clarity. The reason you did not know is structural. The system is application-based. It is fragmented across federal and state agencies, and it defaults to silence. Understanding that is powerful because it tells you exactly how to fight back. You fight back by becoming the person who asks. You fight back by treating your My Social Security account like the important financial document it is. You fight back by making one phone call to SHIP, one application for extra help, one honest conversation with SSA about SSI. The silence only wins if you stay silent too. Now, I promised you actionable claim instructions, not vague encouragement. So let me pull every action step into one clean sequence you can actually follow this week. First, create or log into your My Social Security account at ssa.gov/myaccount and read both your benefit and your deduction lines. Second, call 1-800-Medicare or find your local SHIP counselor and ask specifically about the 3 Medicare savings programs by name. Third, apply for extra help directly at ssa.gov/Medicare/Part D extra help. Fourth, if your income is limited, call SSA at 1-800-772-1213 and ask them to run your eligibility for SSI, and do not disqualify yourself first. Fifth, before year end, book time with a qualified tax professional to talk through the sequencing of your withdrawals and the taxation of your benefits. 5 programs, 5 phone numbers or web pages, 1 afternoon of your time potentially against thousands of dollars a year for the rest of your life. I want to give you one more piece of trust-based honesty before we get to how you can help someone else with this. I do not earn anything from any of these programs. There is no affiliate link, no product, no upsell, no consultation fee waiting at the end of this video. Every resource I named is a free, official government channel, and I named them by their real addresses and phone numbers precisely so you would never have to go through any middleman. Be very careful, by the way, of anyone who offers to sign you up for these programs for a fee. You never need to pay a private company to access Extra Help, SSI, or the Medicare savings programs. The official channels are free, always. If someone asks for payment to enroll you, that is your signal to walk away and go straight to the government source instead. So here is what I am going to ask of you, and I am going to ask it plainly, because it matters more than any comment or subscription. Think of one person you love who is over 65 or approaching it. One person. Maybe it is your spouse. Maybe it is a sibling, a parent, a neighbor you have known for 30 years, a friend from church. Someone who is quietly handing money back to a system that will never volunteer to give it to them. Send this video to that one person today. Not to a list, not to everyone, just to the one person who needs it most. Because everything I told you today only becomes real when someone actually acts on it. And sometimes the person who needs it will not go looking on their own. They need someone who loves them to place it in their hands and say, "Watch this. It is about your money." And if you want to make sure you never miss the next one of these, I have put together a free, plain language checklist that walks through all 5 of these items with the exact web addresses and phone numbers, so you do not have to pause and scribble notes off the screen. It is completely free, there is no catch, and you can find the link in the description below this video. I made it because I got tired of watching people mean to follow up and then lose the piece of paper they wrote the phone number on. Keep the checklist somewhere you will see it, tape it to the fridge if you have to, and work through 1 item a week. By the end of the month, you will have checked all 5, and you will know for certain, instead of assuming, whether there is money out there with your name on it. Before we close, I want to circle all the way back to where we started, because I think the frame matters. The internet spent this whole season talking about a $74 raise as if it were the headline, and I hope by now you see why that framing bothered me enough to make an entire video about it. $74 is real, and I am glad you are getting it. And I want every dollar of it to actually reach your bank account, instead of being quietly eaten by rising premiums. But $74 a month is roughly $900 a year. Compare that to a Part B premium your state might pay entirely, or $12,000 a year in prescription help, or an SSI supplement, or thousands protected from unnecessary taxation. The raise was never the story. The vault was always the story. And now the vault is open, and you have the combination. Let me leave you with the single sentence I most want you to carry out of this video, the one that undoes the quiet cost of all 5 items at once. The system defaults to no, so you have to be the one who says ask. Write that down if you need to. The system defaults to no, so you have to be the one who says ask. Every program today, every dollar, every one of these 5 items comes down to that. Nobody is coming to hand it to you, but it is yours, you paid for it, and it is waiting. All that stands between you and it is a phone call, a login, and a refusal to disqualify yourself before you even try. So make the call, read the notice, apply, and send this to the one person you love who needs to hear it too. Thank you for spending this hour with me. Go get what is yours.